HIMS and HERS stock is down in recent days, even after the stock price has soared in 2024 overall. So what's causing the stock price to decrease? And is this a buying opportunity? I'll answer those questions here in this video. I'm going to review the company's latest quarterly financial results to demonstrate the company's growth rates in revenue and profits and cash flow and subscribers. And I'll discuss how the company's evolving to deal with the risks from the GLP business, how competitors are jumping in to try and take some market share, and compare all of that against the company's valuation to determine if I think the stock is still a buy. Remember, coming into 2024, I've had the stock rated as a buy. I've had the stock rated as a buy all year. So I'll update that recommendation here in this video. Let's jump into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in the third quarter, the company reported revenue of $402 million, which was up 77% year over year. Those economies in scale at higher levels of revenue led the company to increase its net profitability significantly up to $76 million. That's up from a loss of $8 million in the same quarter last year. Cash flow from operations demonstrated a similar improvement, jumping by 238% to $85 million. Free cash flow was up by 312% to $79 million, and subscribers were up by 44% to 2 million. So a lot of positive metrics here from HIMS and HERS, and you might be asking, why would the stock price fall on the back of these results? Well, it has a lot to do with competition and industry-wide factors. Investors are concerned that HIMS and HERS' position in the GLP weight loss industry could be impacted by increasing availability from original equipment manufacturers or pharmaceutical companies that are coming out with increasing supply of their own GLP drugs. So that's having one downside for HIMS and HERS. Although, according to my estimates, the GLP business is not that large of the business overall, less than 20% of the business overall. I think one of the other bigger concerns is Amazon's entry and expansion into the industry and how it could impact HIMS and HERS market share. So those risks are real, and investors are justifiably concerned about the risks to this company's phenomenal growth. So in the shareholder letter, the management team said that since the inception of the company, we've had a disciplined approach to investment and positioned the business to harness benefits from economies and scale. And they demonstrated that with the improvements in cash flow and profitability. They're not just growing revenue and customers, they're also growing profits and cash flow. So they're not just spending money to attract customers, they're actually building a sustainably profitable business here. So the categories they operate in right now, the one with the most publicity is weight loss. And the company highlighting that what's equally exciting is that subscriber growth in operations outside of GLP remains strong at approximately 40% year over year. But undoubtedly, the GLP segment is growing faster than the business overall. But still, even if you exclude the growth from the GLP, the business growing 40% would be excellent. The management team said that more than 1 million subscribers were using a personalized solution, and that was up by 175% year over year. The important thing about that is that they've observed higher retention rates among users with personalized solutions across their specialties. So the more people use the personalized solutions, the longer they stick around, and the growth rate of over 175% in that category is a great indicator of the company's future success, because these are going to be customers with a higher retention rate than most other customers in its business. So they plan to continue expanding their capabilities as they get a better understanding of their customers, and then leveraging their clinical expertise and operational innovation to address those issues. And they're getting really good at operating this business. The bigger they get, the more they serve customers, the more data they collect, the better they can be at serving those customers. And the business model is effective, and it's in an industry that's ripe for disruption, right? The healthcare industry is ripe for disruptions. Many consumers are not happy with how the healthcare industry works and the service that they're getting. And so they're willing to look at something else, some other company to serve their needs. And Hims and Hers so far is doing an excellent job of that, coming in and disrupting this industry that's ripe for disruption. The industry fights among themselves to figure out who's going to get more of the profits, who's going to share more of the money from customers, while neglecting what customers want, what people that are seeking out healthcare, what they want, right? The industries, at least in the United States, has been pretty awful at serving their customers. And when you have that kind of industry, it's ripe for disruption. It's an opportunity for a new player like Hims and Hers to come in and take significant market share because customers are looking around, hoping for a better option to come up. And when one does come up, customers are quick to go and try it out. And as long as Hims and Hers does a solid job meeting those new customers that are looking for a new solution, they can continue to capture market share because customers are so awfully served right now in the United States. And so with increasing scale, we are better able to offer these personalized solutions at more accessible price points, often at levels that are comparable and in some cases lower than generic alternatives, right? This foundation of this business is built on strong economies in scale. As they grow larger, they'll be better able to serve these customers. The more customers they have for each solution, for each category, the better they'll be able to invest in each category and thereby lower the cost per unit and thereby offer these solutions to customers at comparatively better price points. All right, so looking more closely at the weight loss business for Hims and Hers, and according to a study done by Blue Health Intelligence, only 70% of patients prescribed to GLP-1 medications were still using those medications after the first 4 weeks, and by 12 weeks that dropped to 42%. But when looking at Hims and Hers data, at 4 weeks, 85% of their compounded GLP users continue with their subscription, and by 12 weeks, they have observed 70% of users continue with their subscription. So they're delivering their value better than the industry is, and they're getting better retention rates from their customers than industry participants are getting from their customers. As I mentioned, the stock price year to date in 2024 has performed excellently. It's up from $8 a share all the way up to $21 per share. But if you look at the recent few days, the stock price is down from closer to $30 per share down to 21. So is this dip a buying opportunity? Well, if you look at the valuation, it's trading at a forward price to earnings of 23, which you'll be hard pressed to find a company with these characteristics, with these growth rates, and this kind of industry tailwind behind trading at such a low valuation. So I guess from the tone of that statement, you'll kind of guess what I'm going to say here, that I still think the stock is a buy. I've had it rated as a buy all year. I last updated that on June 20th, and I'll update that again here today and reiterate that I still think this stock is an excellent value for long-term investors, acknowledging that there are significant risks here, but the risk versus reward I think is worthwhile. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.